Welcome back to TechKidFX for another Polygon Matic price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Polygon Matic chart, which at the time of this recording has lost the 20-day MA here on the 4-hour chart. We have also lost a significant high at around the $1.3 mark. We have also seen a breakout out of a chart pattern that we had over here, which is an ascending channel, which has given us a breakout to the lower side. We have also continued to hold above a support zone at around the $1.17 mark, and also continue to obey the Elliot structures. And before I give you my next price targets here on the Polygon Matic chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after making our low at around the $0.74 mark, we started a massive bounce to the upside in a move that has been obeying the Elliot structures, where you can see that is what I'm terming as the high for that first wave to the upside at around the $1.05 mark. And after seeing the high for that first wave, whatever we expected next is a corrective structure in the formation of a larger Elliott wave count 2, which we saw over here, giving us the low for that second wave. And after seeing the low for the second wave, whatever we expected next is a bounce to the upside in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.422 mark, and that is the minimum that I was expecting that wave 3 to the upside to do. And once we see the high for that wave 3, I was expecting a bit of a pullback in the formation of that wave 4 before we continue pushing even higher in the formation of that wave 5. And in the formation of this wave 3, you can see that at the moment we have made our peak at around the $1.35 mark. We have not yet fully maximized our target areas in the formation of these higher Elliott wave count 3, and there are chances that we might have peaked in the formation of that wave 3 in this peak that we made at around the $1.35 mark, which is right here. And whatever we are seeing over here could be a pullback to the lower side in the formation of this wave 4, which has been fully supported by the breakout out of this ascending channel to the lower side in a move that has now given us a low at around the $1.13 mark. And at the moment of this recording, we have been able to bounce back and manage to get above the support zone at around the $1.17 mark. And assuming that we peaked in the formation of this wave 3 at around the $1.35 mark, and this is the start of a corrective structure in the formation of this wave 4, we can sketch out target areas here on the charts, and also areas on the Fibonacci's that we need to continue holding above for us to continue pushing even higher, obeying the Elliott wave structures, and also expect the formation of this wave 5 to the upside, and sketching out a minimum retracement area in the formation of this wave 4, assuming that the high for that wave 3 is in at around the $1.35 mark by connecting the Fibonacci's from the low of the second wave to the high we made at around the $1.35 mark. That gives me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, which lies between the $1.1903 mark and the $1.1387 mark, which is a target area that we have fully maximized. But in case we lose the fib level 0.5, I'll have to extend my target area back to the fib level 0.618, and that is at around the $1.087 mark, and that is the maximum that we can expect this fourth wave to the lower side to do. We need to continue holding within this yellow target area, which is right here, for us to say that whatever we are seeing right here is the formation of this wave 4, because there are chances that we might continue unlocking lower prices, and that could also be triggered in case we lose the support zone at around the $1.17 mark. So in case such a move plays out, we lose the support zone at around the $1.17 mark, then there are chances of fully maximizing this yellow target area in the formation of that wave 4. And once we see the low for that fourth wave, then we can expect a massive bounce to the upside in the formation of this wave 5 to the upside. And we also need to have an invalidation point for this Elliott wave structure in the formation of this wave 4, and my invalidation point is at the wave 1 high, so I can mark the wave 1 high here on the charts like that, and that is at around the $1.0591 mark. In case we continue seeing a pullback over here in the formation of that wave 4, I will need this fourth wave to the lower side to continue holding above the $1.05 mark, which is the wave 1 high, because upon losing the wave 1 high or maybe retracing into the wave 1 high, that will be invalidating this Elliot structure that I have right here. So that is the first case scenario that can play out here on the Polygon Matic chart. The other case scenario that can play out is that in case we continue holding above the $1.17 mark, which is a support zone here, give us a break above the 20-day MA, have the support that we need for us to continue pushing even higher, continue pushing higher, manage to break above the $1.3 mark, which is a very significant high here on the charts, then there are chances that we might fully maximize our target areas in the formation of that wave 3 at around the $1.43 mark, which is a target area that I had given you earlier in the video using the trend-based Fibonacci. There's still that possibility, but for that to happen, we need to continue holding above the $1.17 mark, which is a significant support zone. But upon losing that support zone, then there are chances of continuing to push even lower to fully maximize this yellow target area in the formation of that fourth wave. So that is what I'm expecting here on the short-term scenarios, and giving you the long-term scenarios here on the 4-hour chart. If I zoom out, you can see that after making our low at around the $0.34 mark, we started a massive bounce to the upside, obeying the Elliot structures, where you can see that I have this Elliot structure in yellow having the wave 5 making its peak at around the $1.3 mark in what I'm terming as a larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, where we also expect to see an ABC corrective structure play out, where we have seen this ABC corrective structure giving us a low at around the $0.74 mark, and also completing the formation of that larger Elliot wave count 2 to the lower side. And after seeing the formation of a larger Elliot wave count 2, whatever we expect next is a bounce to the upside in the formation of a larger Elliot wave count 3, and that is what I'm expecting here on the long-term scenarios, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $2.3087 mark, and that is the minimum that I will expect that wave 3 to the upside to do, which is an impulsive wave. And that's the reason as to why you can see that I have this Elliot structure in yellow within the formation of that wave 3, where I'm expecting the formation of this wave 5 to fully maximize the formation of that larger Elliot wave count 3. And also taking a look at the indicators here on the 4-hour chart, on the RSI we are trading at around the 40 mark, meaning we have massive room for us to fully support higher prices to give us one more high in the formation of that wave 3. Also on the RSI, a movement to the lower side in the formation of that wave 4 will still be supported. Also taking a look at the MACD, we have been able to print a bearish cross, meaning there are chances that we might continue seeing lower prices in what we could term as the formation of that fourth wave to the lower side. So let's be patient and see how that plays out, and I'll be keeping you updated.